This year we have seen many prop firms go down. Now here are 5 reasons why I believe some prop firms may go down in 2024. So let's take a deeper look. The reason why prop firms went down in 2023 because of regulation. Now the prop firm space was booming this year, and as a result regulation was required. Now regulation isn't cheap, and new regulation come out every other day. So you have to really make sure that your regulation is on point in the country that you are in. Now regulation, as we know, costs a lot of money, and most of the prop firms actually can't afford it because it eats up into their profit. And as a result, this is why we start seeing most prop firms going downhill. And in 2024, this can be the issue. This is why you want to stick with prop firms that are well known, but they're making good amount of profits, and which are regulated as well. The second reason why prop firms can go down is poor risk management. Now let's say you have done challenge 1, challenge 2, stage 1, stage 2, or whatever it is. Now you're trading funded capital, real capital, live capital, whatever you want to call it. Now, let's say all the traders are trading one pair. This could be gold, they got no stop loss on, and let's say they're all in one direction. Now this can work in your favor or against their favor as well. Now what can happen now? Because a portfolio is not being hedged, meaning it's not equal. Let's say you make a win, that one must take a loss, so it's not equal. Let's say everyone takes a loss. What happens? The whole portfolio gets demolished, and you will lose a large amount of capital. And yes, they can have certain amount of risk measures in place. They can say you can lose 10%, whatever it is. But this all depends on how the business model works. If the business model is paying you out of failed challenges, commission, whatever it is, there's a different story. But if you're trading real capital and they face slippage, the problem that they're going to have, they're going to lose a lot more capital, especially if everyone's trading in the same direction. Now, what happens if they're not trading in the same direction and the portfolio is hedged? This is ideally what they want. Let's say some people are trading X amount of pairs and the other people are trading at the other pairs, and they're all in different directions. This is good because when some make money, the others will lose money. And as a result, along with the risk management is on point and the risk reward ratios are on point, they will make money at the end of it. The third reason is market conditions. Now market condition, let's say NFP comes out, well let's focus on the big news. Let's say interest rates. Interest rates comes out for USD. And we all know when news comes out, especially red news, high impact news, you can see large momentum forming in the candles. And this can cause slippage as well. Now, let's say large news comes out or high impact news comes out and everyone's trading in one direction. Every single one of that trader is going to face slippage. And this really happens in majority of these brokers as well. So let's say there's a position here, now the stop loss is there, and price, let's say when it goes up, let's say against your favor, it skips over its stop loss because that price was not available. This is what usually happens, and this is what has happened to me, and it's a very valuable lesson, a very expensive lesson that I've learned. So everyone's trading in one direction and the face slippage, high impact news comes out, this can have a massive toll on that prop firm, meaning they can blow a lot of capital. And yeah, that could be one of the reasons why they can go down. Now the fourth reason is where it gets very interesting, and I want to talk about talent drain or draining talent. Now talent draining is when talent runs out. So essentially, let's say you have competitors, there's another prop firm with better opportunities or cheaper pricing or better split ratios or whatever it is, so everyone start going there. If all your good traders are going to go, let's say, to another prop firm, what happens? Your talent gets drained, meaning you don't have good traders anymore, and especially the ones that were making profit for you. So as a result, what happens if the prop firm is not making money now because of their traders and they're legitimate? What does that mean? They're going bankrupt. So this is another point to consider, because draining talent can lead to prop firms collapsing. This last reason is very critical, and you must understand this, which is technology malfunction. Now in this trading space, yes, technology can malfunction. Your softwares can go down, they can get hacked, you can get cyber attacks. Now the world that we are living in currently is a digital world. There's a lot of wars happening, a lot of digital wars as well that you don't see. Now as a result, let's say a prop firm gets a cyber attack on it, or the internet goes down. What's going to happen? The whole business model gets taken out. Let's say they get hacked, the capital is gone. So this is something that you have to understand. Even such things as malfunction in software, there could be a glitch in the software that can cause, I don't know, for all the stop losses to get removed, or let's say all the challenges to get passed, and a lot of people, they don't do very well. Or let's say there's a glitch when you're buying packages or something. It could be anything. Let's say everyone start buying the free challenges and passing them, and essentially what happens, your portfolio becomes very unsteady, because now you got a lot of new traders coming into your platform and they can ruin everything for you because of what? One little glitch. So glitches, hacks, cyber attacks, all of this can play a big part in these prop firms, and this is the biggest reasons why prop firms may go down in 2024, especially at the time of war, the digital era, and the new digital revolution that we are really living. So these are the 5 reasons why prop firms may go down in 2024. We have seen this happen in 2023. So make sure you diversify your portfolio. Make sure you, let's say you have other prop firms that you're trading with and with live capital. So let's say one prop firm goes down, you're not, let's say, visually. Anyways, if you like this video, make sure to like, subscribe, comment below what video you want next. See you soon.